Welcome back, everybody. I hope you enjoyed the intermission, and we now look forward to what shapes up to be an excellent presentation by Mark Wolstoncroft and Megan Troxell. While it has been pre-recorded, please note that Megan will be standing by live to answer any questions in the Q&A in the chat section. So with that, look forward to seeing what Mark and Megan have to say. Thanks again, everybody.
Good afternoon, and welcome to our presentation this afternoon regarding fraud in a dynamic landscape. I'm Mark Wolstoncroft.
And I'm Megan Troxell. We don't need to tell you that 2020 has been a challenging year. 2020 has brought many unique challenges for accountants. For many, work has shifted from a centralized office environment to a remote work environment. This shift has resulted in both intentional and unintentional changes to control environments. In many cases, the changes have resulted in more information and processes being online.
The 2020 headlines are full of fraud claims, whether it be claims over voter fraud, claims regarding fraud in the Paycheck Protection Program, or in June of 2020, Ernst & Young accused their longtime client, Wirecard, of an elaborate and sophisticated fraud estimated at $2 billion. Because of the dynamic landscape that 2020 has provided, we think a discussion regarding fraud prevention is particularly timely. Today, we'll look at the Association of Certified Fraud Examiners report to the nation regarding fraud and occupational abuse. We'll also look at an ACFE publication regarding fraud in the wake of COVID-19. And finally, we'll look at the ACFE fraud prevention checklist. This should help us all to take a fresh look at prevention matters and think about things that we may want to implement in our organizations.
The Association of Certified Fraud Examiners first issued a report to the nations on occupational fraud and abuse in 1996 and has released updated reports biannually since 2002. While this study covers only a small fraction of the frauds committed, it is the most comprehensive examination available of the costs, methods, victims, and perpetrators of occupational fraud. The 2020 report contains an analysis of more than 2,500 cases of occupational fraud that occurred in 125 countries. 46% of these cases occurred in the United States and Canada. We'll include a link to this report in the comments.
Megan, every time I see one of these ACFE studies, I'm reminded of how prevalent fraud is. I know it's more prevalent than either you or I are comfortable with, and I imagine it's more comfortable than most of the folks in our audience today are comfortable with. We really shouldn't be surprised, though. Well, for one, the ACFE reminds us every 2 years.
But also, from very early on, it seems to be part of our nature. Mark and I are each raising families, and so we get to see this firsthand. During this afternoon's presentation, for a little bit of fun, we will have some childhood examples of fraudulent activity.
Megan, I'll kick us off with one of those examples. My wife, Judy, and I have 4 kids ranging from 14 years old to 4 years old. Our 4-year-old, Millie, likes dance class, Barbie dolls, and hanging out with her very best friend who lives across the street. Millie is a sweet and a kind, caring heart. But I've definitely seen her take Barbie dolls from her friend while they've been playing, and I've seen them argue about it. When I've asked Millie about it afterwards, she always has some sort of rationalization. Well, I really like that Barbie doll's dress, and my friend already had 2 other Barbie dolls. Millie's only 4 years old, and despite our best efforts, she's already learned the rationalization side of the fraud triangle.
Let's get started by looking at 10 of the report's key findings. Many of our slides today, starting with this one, are graphics directly from the ACFE report. The first finding is that the typical fraud case lasts 14 months before detection and causes a loss of $8,300 per month. So that adds up over time to a total of $116,000 over the duration of the fraud. It's worth noting here that the current COVID-19 pandemic started at least 8 months ago. Based on this finding, it seems likely that many frauds that began in conjunction with the opportunities created by the disruption of the pandemic may not yet have been detected. We'll talk a bit later about some specific findings related to the pandemic. Second, certified fraud examiners estimate that organizations lose 5% of revenue each year to fraud. Pause for a moment and think about how that translates to your own workplace. What is that number for your business? And what can you do to protect it? The median case included in the study is $125,000, although the range of loss is vast, and the average loss per case was more than $1.5 million. And translating this to a global scale, that's more than $4.5 trillion that is lost to fraud globally each year. This is obviously a staggering loss. So the goal of the ACFE report and our own hope for today is that we can help you understand these crimes and contribute to improved detection and deterrence.
Consistent with prior reports, the 2020 report classifies occupational fraud into 3 categories. Asset misappropriation was by far the most common, but was the least costly. It was prevalent in 86% of the cases with an average loss of $100,000. Financial statement fraud was the least common and the most costly, just 10% of the cases, but $954,000 of the average loss was a result of financial statement fraud. Corruption occurred in 43% of the cases, and the average loss on those cases was about $200,000. I recognize that I'm speaking this afternoon to hundreds of accountants, and that most of you are going to do the math and notice that 86% plus 43% plus 10% is more than 100%. That's because the 3 different types of schemes don't always happen independently of one another. There's often overlap in an effort to achieve or cover up asset misappropriation. You can see that on this chart here. Asset misappropriation is by far the biggest circle in this Venn diagram, but you can see that most of the time when there's corruption, it's covering up asset misappropriation, and most of the time when we have financial statement fraud, it's covering up asset misappropriation. I saw a case several years ago where the perpetrator used financial statement fraud to cover up asset misappropriation. The controller was stealing cash, but knew that he needed to make the bank reconciliations work. So each time he stole cash, he credited cash and he debited inventory. He essentially hid the theft in inventory and got away with it for many years. Of course, we can all think about that scenario and realize that that's a very good case for cycle counts in your inventory and or a good year-end physical inventory account. When we look at the corruption category, I expect that kickbacks on purchasing accounts for at least a portion of the overlap between corruption and asset misappropriation. As Megan previously mentioned, the average duration of a fraud scheme is about 14 months. However, the ACFE report tells us that certain types of schemes tend to last longer. Some schemes typically last up to 2 years. Those schemes include payroll schemes, check and payment tampering, register disbursements, financial statement fraud, expense reimbursements, and billing schemes. We'll talk a little bit more about those shortly. In order to cover their tracks, perpetrators often work to actively conceal their fraud. As you might expect, the majority of perpetrators, 78% of them, attempted to conceal their fraud. You wonder a little bit about the 12% that didn't try to conceal their fraud. But some of the common methods for concealment include, as you can see on this chart here, creating or altering physical documents, or creating or altering electronic documents. You can see that 40% of the fraudsters created fraudulent physical documents, 36% altered physical documents, And then about 27% altered electronic documents or files, and 26% created fraudulent electronic files or documents.
After giving you some information that may have caused your jaw to drop and potentially scaring you a little, let's start to look at some things that can help to mitigate the numbers we just reviewed. The ACFE recognizes that not all fraud can be prevented. So that means in order to reduce the magnitude of the loss, quick detection is vital. The ACFE consistently reports that tips are instrumental in detecting fraud. 43% of fraud schemes were detected by a tip, with half of those coming from employees. And in a third of all cases, a hotline or email was used by the person reporting the fraud. Additionally, for those organizations with some type of fraud awareness training, they increase the gathering of tips through their formal reporting mechanisms. So this shows there is evidence that having a formal way to report fraud, plus the fraud awareness training, leads to greater and earlier detection. That brings us to our first polling question. Does your organization have a fraud hotline or some other mechanism for reporting potential fraud? Give us your answer of yes, no, or I don't know. So, how many people still have some Halloween candy left at their house? We still have a fair amount, although the stocks of the favorite items, Almond Joys and Mounds for me, are long gone. As parents, our rules for Halloween candy consumption are stated and made clear to our two boys, ages 10 and 8. They know what the rules are. And you better believe that if one of them is not following the rules, the other one will quickly report in. When it comes to parenting, it seems there is always an open line for whistleblowers to report in on their siblings' breaking of a family rule. So maybe it should come as no surprise to parents or anyone who has had their sibling rat them out that the top way to detect fraud is through a tip. And furthermore, the most likely reporter is a fellow employee, someone who is part of the family, so to speak. Detection is an important concept in fraud investigation because the speed with which fraud is detected can have a significant impact on the size of the fraud. We touched earlier on the duration of fraud schemes and how quickly that loss number starts to accumulate the longer the scheme goes undetected. Earlier detection means that the total loss will be reduced. Detection is also key to fraud prevention because organizations can take steps to improve how they detect fraud, which in turn increases the staff's perception that fraud will be detected and might help deter future misconduct. The ACFE findings demonstrate that internal education and communication should be a priority to assist in initial detection. There should be processes in place to cultivate and thoroughly evaluate tips. But we also shouldn't ignore outside parties. There are still a substantial number of tips from those outside the organization, including customers, vendors, and even possibly competitors. The data included here should be encouraging to organizations. Because of the more complete data the ACFE is able to gather on how fraud is committed, we can start to target those controls that help to reduce the risk of fraud occurring. The ACFE's data shows that the presence of anti-fraud controls is associated with lower fraud losses and quicker detection. Over the last decade, the ACFE has seen increased uses of hotlines, anti-fraud policies, and training for employees and managers and executives. The primary reporting mechanisms have been telephone hotlines, email, and a web-based form. In the 2020 ACFE report, the data shows that whistleblowers used each of these reporting mechanisms approximately equally, a third for each. So organizations should consider maintaining multiple reporting channels in order to fit the needs of those who may submit tips. Without these anti-fraud and other controls in place, there is a higher likelihood of fraud occurring. As we continue our presentation, we'll get further into fraud prevention and specific internal controls that can be used to prevent fraud.
As we look at this next slide, it's finding number 6 out of 10. I want to note that for purposes of this ACFE report, they consider businesses with less than 100 employees to be small businesses. So they compare small businesses and large companies here. Small companies are less than 100 employees. Large companies are considered to have more than 100 employees. Some frauds are more likely in the small businesses. They particularly flag billing fraud, which they say is 2 times more likely in a small business than in a large business. Say payroll fraud is also 2 times more likely in a small business. Check and payment tampering, they say, are 4 times more likely. Unfortunately, as we just discussed a few slides ago, these are some of the schemes that often take up to 2 years to detect. These are areas that can be exploited, particularly if internal controls are weak, which of course is more common at small companies than at large companies because there tend to be less controls at small companies. Remember that this is all based on pre-pandemic data. In many cases, I imagine the controls were loosened rather than tightened at organizations as they reacted to the pandemic. This is part of the reason that Megan and I feel that today's presentation is timely and important. Additionally, we fear that concealment can be easier in a remote work environment for a number of reasons, including there's more reliance on electronic documents, which may be more easily altered. And there's less direct and physical oversight of work. Some fraudsters may perceive more opportunity when they perceive oversight to be low. And they may feel emboldened to attempt concealment without the prospect of someone looking over their shoulder. In order to address the risk of fake employees or fake vendors, as part of our audit process, we often review payroll registers and payments by vendors with the CEOs or with owners. Often these folks know all the folks that work for the company and know their significant suppliers. So they're well suited to spot anything unusual or suspicious in these reports. This is something we often do in conjunction with our audit process, but it's certainly a control that could be implemented internally as well. It's a good idea to be looking and making sure that the folks that are on the payroll are legit employees and that the companies that are receiving payments from our organizations are companies that should be receiving payments. It's also worth noting that there are also now analytical tools that can be applied to general ledger detail in order to help spot suspicious transactions.
The next slide shows that men consistently commit a higher percentage of fraud cases, and the resulting median losses are consistently higher as well. I would say that this is a pretty strong endorsement to have more females in your workforce. Although I would add a caveat to say that if we look at the US and Canadian statistics alone, the gender disparity of fraud perpetrators is not as divided as these global statistics might show. Not surprisingly, as a result of their position, when owners or executives are involved, fraud losses tend to be much bigger, although these are a smaller portion of overall fraud cases.
Megan, the owner executive side of your slide reminds me of another example from the kids in my neighborhood. It's an example from the opportunity leg of the fraud triangle. This time I'm going to focus on my son, JJ. He's 7 years old. This fall, JJ and his buddies decided to try to make some money raking leaves in the neighborhood. There were 5 of them on the raking crew. The oldest boy, not surprisingly, took responsibility for collecting the cash, and the younger boys well, they ended up being responsible for carrying rakes and bags. When I watched the oldest boy divide up the cash at the end of the day, I noticed him keeping the bills for himself, while the coins are what he gave to the younger kids. Now, I didn't audit the results, and all the kids left happy with their take. However, there was likely opportunity here for the older boy in a position of power if he wanted to capitalize. Megan, to your point regarding more women in the workforce, I'll have to talk to JJ and his buddies about that. Their raking crew was certainly not as inclusive as it could have been. Finding number 8 here, the ACFE also highlights that more than half of the occupational fraud comes from operations, accounting, executives, and sales. So this essentially, the fraudsters are involved in each of these departments. 15% of the time they're from operations, 14% of the time they're from accounting, 12% of the time they're from executive upper management, and 11% of the time they're from sales. This was a little bit surprising to me that there was such a spread and it was so evenly distributed. Finding number 9 includes some statistics about perpetrators. It says 42% were living beyond their means and 26% were experiencing financial difficulties. It's a common theme throughout the ACFE reports over the years. The ACFE report includes a section regarding perpetrators. Some of the other interesting information from that section includes the level of authority has a direct impact on the amount of the fraud. So the higher the level of authority of the fraudster, the more they were able to get away with. It tells us that employee perpetrators, their fraud lasts about 12 months, while if they're a manager, the fraud tends to last 18 months, and if they're an owner or executive, the fraud tends to last 24 months. Also, longer tenured perpetrators tend to perpetrate bigger frauds. That didn't surprise me too much, but the spread is pretty remarkable. If a perpetrator was with an organization for 5 years or more, the average was $190,000. And that's twice what the less tenured employees got away with. 64% of perpetrators had a university degree or higher, and the older, more experienced fraudsters caused larger losses. This statistic was also interesting to me. Fraudsters that were 55 years of age or older got away with, on average, $425,000, while fraudsters that were younger than 55 tended to get away with $150,000 or less. 89% of the fraudsters were never previously charged or convicted. 7% had been charged with a fraud-related crime but not convicted, and 4% had previous convictions. So a lot of times the folks that choose to commit fraud, are doing it for the first time. But in some cases, and this is obviously a case for doing good background checks, 4% of these folks had previously been convicted of fraud. So it's important that we do the background checks and see those previous convictions, and if we can, find about if they've been charged before or not. There's an interesting section regarding in the report regarding essentially the thought process is, do perpetrators have HR issues prior to being caught? And the report says that 20% of the perpetrators had a history in HR of bullying. They had been reported for bullying, and 13% of the perpetrators had poor performance evaluations prior to the fraud. Just a little bit more information regarding the perpetrators. The ACFE tells us that 85% of the perpetrators displayed at least one red flag. And the red flags that are listed, two of them we already saw, living beyond their means, 42% were living beyond their means, 26% were having financial difficulties, 19% had an unusually close association with a vendor or a customer, 15% had control issues or an unwillingness to share duties, which is not surprising. They don't want to be caught. 13% had irritability, suspiciousness, or defensiveness. 13% have what's described as a wheeler-dealer attitude, and 12% had divorce or family problems. So it's a good idea to have a heightened degree of skepticism. Anytime you see one of these red flags, it's a good idea to just think about what the opportunities do folks have, and is there a chance that they might commit a fraud, and it might be good to do some additional review of their work and additional look at the controls around their duties.
Once an internal fraud is substantiated, the victim organization must decide what to do with the perpetrator. In 2/3 of cases, termination was the result, not surprising. And in an additional 10%, the term resignation was used versus termination. I suppose that's really the same end result. In a small percentage of cases, 5%, there was actually no punishment at all. This seems to be the case primarily with owners and executives. Many victim organizations never refer their cases to law enforcement. The primary reason the fraud isn't reported is because internal discipline is considered to be sufficient. As we just mentioned, in the vast majority of cases, the perpetrator is no longer with the organization. So it seems that victim organizations in many cases cut their losses and continue on. Other reasons for not reporting cases of fraud are the fear of bad publicity, lack of evidence, or that it's simply too costly to pursue once it's discovered. In approximately 1/4 of cases, a private settlement is reached. To end on a depressing statistic before we transition to the next section of our presentation, in about half of fraud cases, the organization did not recover any of the losses related to the fraud that occurred.
That brings us to the end of the ACFE's findings from their 2020 report to the nations. More recently, the ACFE published a benchmarking report regarding fraud in the wake of COVID-19. We'll put a link to that report in the comments. The key findings in the benchmarking report clearly indicate an increase in fraud, both since the start of the pandemic and an expected increase in fraud in the coming 12 months. You can see that 77% of the respondents had observed an increase in fraud through August of 2020, and 92% of the respondents expected an increase in fraud over the next 12 months.
While the overall level of fraud has increased in the wake of COVID-19, certain types of fraud are particularly more pervasive. The top 3 areas of fraud risk as it relates to the current pandemic seem to be cyber fraud, such as business email compromise, hacking, ransomware, and malware, unemployment fraud, payment fraud, such as credit card fraud and fraudulent mobile payments. All of these specific areas of risk show an increase of 60 to 80%, while the perception that fraud will increase continues to be bleak, with almost all respondents to the survey anticipating increased fraud over the course of the next year. Some additional areas of fraud that didn't make it into this slide, but that are important to be aware of, are fraud by vendors and sellers, such as price gouging, product misrepresentation and overbilling, healthcare fraud, identity theft, insurance fraud, loan and bank fraud, and the list continues on and on. In response to the perception that there is likely to be increased fraud over the next year, the ACFE specifically polled their respondents relative to budgets for anti-fraud programs, and about 40% expected their budgets to increase. This increased spending is expected in a few key areas, primarily anti-fraud technology and anti-fraud training. During this pandemic, all of us have seen our day-to-day lives change, and even the way we accomplish some of our work-related tasks has changed. Hello, virtual GYF CPE Day. Fighting fraud is no different. With a dynamic environment, organizations need to adapt to how we prevent, detect, and investigate fraud. This leads us to our next polling question. What primary challenge has your organization faced in combating fraud in the wake of COVID-19? Changes in controls due to a remote workforce, changes in controls due to staffing changes or reductions, maintaining data, privacy and security, communication challenges or delays, or other items.
The COVID-19 report mentions some things that are beyond the scope of the report to the nations, because the report to the nations is focused on occupational fraud. I want to touch on a couple of those items, including fraud by vendors and sellers. I have a real life example of that one. And I also want to touch on cyber fraud. First, I have a story regarding fraud by vendors and sellers. You know, auditors like Megan and I are trained early on to be skeptical. We're trained to trust but verify. This can have an impact on our professional lives and can spill into our personal lives. If you've been to our annual CPE Day before, when I've previously presented regarding fraud, you know that I enjoy telling some stories about exercising that skepticism from my life outside of public accounting. One year, I told a story about a fraud I witnessed at my local home improvement store. Customers were putting more expensive products in the boxes of less expensive products in order to pay less for the premium products. Another year, I had a story about my local sporting goods store, where they ran out of advertised promotional golf balls the week the promotion had started. And then just a couple weeks later, I saw them selling the promotional golf balls from the shelves. Well, since we rarely go to the store these days, this year's example has to do with online shopping. Earlier, I mentioned my entrepreneurial leaf-raking son, JJ. For JJ's birthday this summer, we decided to get him a basketball hoop. I did start at our local sporting goods store, but due to the demand with the pandemic, and despite the plethora of floor models, they didn't have any hoops for sale. I tried to buy a floor model, but apparently they are owned by the vendors and not by the stores. Then, thanks to the internet, I found a hoop online. As I mentioned, JJ's 7 years old. He definitely did not need the top of the line model. However, I knew that the neighborhood kids would use the hoop, and I didn't want the budget model. So I ordered the mid-range model, and I waited patiently. A few weeks later, before JJ's birthday, I received the hoop. That weekend, I rolled up my sleeves, and I prepared for the assembly. I had read on the reviews that the assembly would be challenging and time-consuming. But when I opened the box, I quickly realized that this was not the mid-range model. It was the budget model. So I went back inside and I checked my credit card statement, and sure enough, I had been charged for the mid-range model. When my wife and I requested that they exchange the hoop, the seller indicated that they didn't have any mid-range hoops in stock. But they said that they would gladly give us a 20% discount if we wanted to keep the budget model. That offer was ridiculous, not only because a 20% discount would have resulted in us paying more than they had the discount hoop listed for, but also because the website clearly still indicated that they had 11 mid-range models for sale and in stock in their warehouse. After several months of runaround, we did finally return the hoop, and we did finally receive a full refund. That just happened very recently. JJ still doesn't have his birthday present, and we're working on that. But I'm convinced that the seller intentionally sent us the budget hoop and charged us for the mid-range product in attempt to, essentially capitalize on the pandemic and to attempt to make a substantial product by selling us one product and providing us a different one. I suspect that we're not the only ones. I'm glad that the COVID-19 report addresses cyber fraud too. Robin, Ryan, and I dedicated an hour to cybersecurity at last year's CPE Day, and it's a topic that is even more relevant today than it was last year. So next up, I have a throwback slide. It's a slide from our November 7th, 2019 presentation. This throwback slide is about business email compromise, and that is a big deal. We all get suspicious emails, no matter how good our email filters are. Some of the emails are clearly bogus. At this point, I think we all know how to steer clear of foreign princes looking to divest their wealth. However, others of these emails can appear to be from people or organizations that we know and trust. Those emails can look pretty legit. These emails are generally designed to get us to click on a link that downloads malware, or to get us to provide information that the senders can use for fraudulent purposes, including our passwords. These emails often create a false sense of urgency or leverage inconvenient timing. Our strategies for keeping our companies safe from fraud need to include education and testing around business email compromise. Our firm does quarterly phishing tests where Glenn, our IT guru, sends phishing emails crafted to get us to click on a link. He then publishes our results, how many folks clicked on the phishing email. This has been educational and is improving our ability to avoid these BEC emails. I'd encourage everybody here to be skeptical of requests for changes in account numbers, routing numbers, anything of that nature. These cyber criminals can and do find ways even to jump in the middle of legit email change with your customers. When in doubt, especially if it's involved transferring a cash, make sure you call your contact and verify. I've had clients that have experienced those frauds. Email chains with customers and vendors where the fraudsters were able to jump right in the middle of legit email chains, pose as the person on the other side, and get clients to change that information in their system and to transfer funds accordingly. So please be very, very cautious around those times when somebody asks you to change an account number to send a payment somewhere different than you're expecting to make the payment. Make sure you pick up the phone and call in those circumstances, please. Okay, we're going to talk next about the fraud prevention checklist. Before we do, just a few closing notes on the ACFE report. It's an 88-page long document, and it's an interesting read. We don't have time to cover it all today. If you're interested, there is information well beyond what we've covered today, including information regarding regional differences. Megan mentioned one of those relative to males and females. There's additional information regarding regional differences. There's a section regarding victim organizations and things that victim organizations tend to have in common. There's a good profile of fraudsters, of perpetrators that's interesting. And there's also some discussion regarding responses to fraud, including what the punishment looks like and what happens to people who have perpetrated fraud. Megan shared a little bit of information, but there's certainly more in the report. The findings in both this ACFE report to the nations and the COVID-19 report, I think they're interesting and they warrant consideration from the accounting profession, particularly in this dynamic landscape. Within the report to the nations, at the very end, starting on page 84, the ACFE includes a fraud prevention checklist resource. We're going to take a look at that next, and we'll close out today's presentation with some examples. So the fraud prevention checklist includes 11 sections with several checkpoints in each. The next 3 slides demonstrate those 11 sections. They do not include the underlying checkpoints. You can check in the ACFE report if you'd like to see those. The first 4 points, though, center around tone at the top, training, reporting, and perception of detection. Personally, when I think about prevention and detections, I tend to think more in terms of detailed internal controls and essentially what could go wrong. However, the ACFE, and this is a continuing finding in their reports, they continue to find that these softer items are very important. Accordingly, I want to encourage you to look at these and consider if there are items that might be worthwhile at your organization. I do think that number 3, increasing the perception of detection, is even more critical in this remote work environment. Folks need to know that someone is reviewing their work, that somebody's asking questions about their work, and this can be less evident in a remote work environment, which could lead to folks perceiving an increased opportunity. So as you look at these, I do encourage you to consider some of these softer items in your overall fraud risk approach and evaluation.
Number 5 on the fraud prevention checklist gets at performing a fraud risk assessment to help identify and then mitigate the organization's vulnerabilities. The ACFE has an even more detailed fraud prevention checkup on their website as a free resource. We'll put the link to that here. If your company hasn't gone through this exercise, now would be a good time to review these specific questions and assess where you may see potential risk and what you can do to mitigate that risk. Once you've gone through the broader, higher level assessments, you can start then to get into the details of strong anti-fraud controls. Specific to our current environment in the midst of the pandemic, here's what you may have, where you may have the most identifiable changes. You will want to think about what has changed and how your organization is addressing that. These anti-fraud controls fall into the following categories: segregation of duties, authorizations, physical safeguards, job rotations, and mandatory vacations. Mark and I will close out our session today with some specific examples that we've either witnessed or could easily see occurring in today's work environment. Here are the remaining considerations on the fraud prevention checklist. Number 8 pinpoints the organization's hiring policy and what kind of background and reference checks are done. We've talked a little bit about this earlier in the presentation, and there's a few things to consider. First, 75% of fraudsters who were caught are out of a job, and they may very well be looking for their next opportunity. Not always, but presumably some type of employment verification, background checks, and reference checks would turn up some sort of termination with cause. You certainly won't know if you skip over this step entirely. Second, Mark discussed some of the behavioral red flags of fraudsters. This may be harder to pick up on during the hiring process, but certainly still something to have an awareness of and consider. Behavioral red flags leads us into number 9. For current employees, are there support programs to assist those who are dealing with personal and family problems outside of work? This may be harder to identify when we are working remotely, as we simply don't see people as often. For many, coworkers provide a pseudo-family type of support, and with the transition to remote work, this inherent support system, whether intentionally created or not, is now gone. If we don't have this in place, an organization risks an increase on that pressure side of the fraud triangle, which may drive someone to do something they wouldn't otherwise do if that pressure wasn't bearing down on them. Number 10 suggests that an open door policy can allow employees to speak freely about pressures, and that management can then help to alleviate that pressure. If management encourages employees to discuss some of these pressures and can then help to solve the problems, we'll have a more productive and focused employee. Right now, maybe that looks like allowing for more flexibility in work schedules so parents can assist their school-age children with virtual learning, or providing the right technology tools for setting up a home office, covering parking expenses so that public transportation can be avoided, providing timely feedback so that employees know how well they are doing their jobs. All of these types of things can be conversations that are part of that open door policy. And finally, are regular anonymous surveys conducted to assess employee morale. Some of these other items that we've discussed are good, but giving employees the chance to communicate anonymously may also be important for understanding some underlying issues. And now we are at our final polling question. Has your organization modified fraud prevention and detection efforts as a result of the pandemic? Yes, no, or I don't know.
Megan and I have the opportunity in the course of performing our jobs to see a wide variety of controls in practice. Some controls are good, some controls could use some improvement. We're going to close out with some specific examples, including some pandemic-related considerations. Megan and I both serve in a professional capacity or volunteer with a number of nonprofit organizations. Many of these organizations have shifted to a remote work environment at the beginning of the pandemic and continue to work in a remote environment today. These organizations tend to have limited staff and limited ability to segregate duties for strong internal controls. One control that some of these nonprofits use is essentially to have both the executive director and the office manager to open the mail together. They'll sit down together, they'll go through the mail, they'll segregate contributions, they'll segregate bills, or segregate other things that are included in their mail. And this process helps by having multiple people involved in this process, it helps to make sure that all the donations that come into the organization get properly recorded in the system. This is a control that would have been easy to let slip in conjunction with the pandemic. It became harder to do that control, but fortunately many of the organizations that we serve or are involved with opted to simply do that a little less frequently, but still to do it together. Maybe instead of doing it daily, they decided to do it weekly, and they decided to get together weekly, go through the mail, and to exercise all the necessary precautions from a COVID-19 perspective. So that's an example of a control that easily could have been abandoned, but we're happy that many of the organizations we work with decided not to abandon that control and to keep that strong segregation of duties. Also, I wanted to mention for-profit and nonprofit organizations alike tend to be adopting new technology tools more quickly now really than ever before. Some companies have shifted away from the historical manual three-way match where you match the purchase order and the receiver and the invoice, and they've made that an electronic process. This switch does involve an investment of some thought and some resources, but what's happening is they're ending up with a better process at the end of the day, a process that is easier to tune in a pandemic environment and, will be better and more efficient after the pandemic is over. So this is an example of a way that organizations really some organizations have actually improved their controls in a time when it would have been easy to let controls suffer.
So Mark, you've had some examples that show controls remain strong or maybe even were improved during the pandemic. I have one I'll share that may be allowing increased risk in one area to try to reduce risk in another area. So this relates to physical safeguards. So many of us are aware of the CDC specific guidelines relative to cleaning, washing our hands, things like that. There are specific guidance relative to high-touch surface areas, such as door handles, light switches. Many of us are at least a little bit wary of these high-touch areas and try to avoid them as much as possible. I've been in one office that typically has a locked entrance to separate internal wings, which employees can unlock with a code entered into a keypad. In order to reduce the need for touching the keypad, which admittedly would be touched by multiple people throughout the day, the door is simply left unlocked and open during business hours. So we have a case where maybe we're reducing the risk of spreading the coronavirus, but we may be increasing the security risk. Job rotations and mandatory vacations are our final consideration of internal controls. During more normal times, we try to point out the importance of cross-training employees to perform various tasks and responsibilities that aren't part of their normal job responsibilities, and then testing this out occasionally. This really achieves two things. First, it provides a backup in case the primary person is unexpectedly unable to perform that job. Second, when used appropriately, job rotations or mandatory vacations can provide a disruption in routine processes that might uncover fraud that would otherwise go undetected. Unfortunately, what I'm starting to see is that COVID is mandating these job rotations, as people are either unable to work because they are sick or somewhat limited in their job performance because they are quarantined because they've been in touch with a close contact. This isn't really something that we want to see, but as all of us have had to adjust expectations and look for silver linings, you could take this for what it's worth. So with that, we will draw to a close today. Thank you so much for being with us. We are hoping that the ACFE findings we went over were informative and opened your eyes to some of the current data that can help you in your organization make wise decisions about how to protect your business. And we also hope that we provided some good reminders of the importance of fraud prevention and detection, particularly in the dynamic landscape created by the current pandemic. Most importantly, we hope that you and your families are remaining well.
As you continue your fraud prevention and detection efforts, please know that Megan and I are familiar with the challenges. We see internal controls on a daily basis, and we get to see how others are crafting their plans. We would be happy to be a resource to any of you. Please don't hesitate to be in touch with us. Thank you all for joining us today, and for many of you, thank you for joining us throughout this four-part series. Many of you join us annually for our in-person CPE Day. We were disappointed that we couldn't do that this year, but we're looking forward to resuming that format again in the future and look forward to seeing you all in person then. Thank you for being with us today. All the best, folks. Stay well.
And that concludes our final part of the CPE Day series. Again, we thank you all for joining us, and we hope to see everyone in person next year. Thank you, and have a safe and enjoyable holiday season.